Good morning, everyone, and welcome back to Morning Markets from True Potential. Today, we'll look at the bond market, and particularly the sovereign bond market in the US, and some of the initial reaction to what's happening in the Georgia Senate runoff at this point in time. So just looking back at equity markets yesterday and asset markets in general, we saw equity markets modestly lower in Europe, the exception to that being the UK, where the FTSE was up about 60 basis points on the day. Looking at Europe in particular and some of the economic data points out, it was very interesting yesterday to see strength in German retail sales for November, up 1.9%, and also improving employment conditions as well, both of which kind of went against the grain of market expectations. But they did show, and it does speak to some of the points that we've been discussing over the past number of months, that strength in the manufacturing sector and the ongoing recovery that is very evident there, being very particularly supportive to the German economy at this point in time. So that's something that we'll continue to monitor going forward, and it really does serve to highlight that dichotomy that there is between the services side of economies that are really suffering from the restrictions that we see as a result of COVID-19 versus the manufacturing side that continues to be generating recovery. And I'll come on and touch on that in the context of the US data points from yesterday as well. The US, I think yesterday we saw sentiment was definitely buoyed by the ISM data point, so a PMI reading which was very strong in the US for the manufacturing sector, increasing to 60.7 for December from around 57% in November. And in comparison to that, we had seen forecasts that were expecting a decline. So 7th month of improvement in manufacturing sentiment and activity in the US. Looking back, it probably takes us back to levels similar to August 2018. One area of note is that which was going on at the subcomponent levels, and just looking at the prices component. So prices paid by manufacturers did increase, and that's something just to monitor over the coming months, because that could over time feed into rising prices and feed through into inflation expectations. But very much like that discussion with Germany, the manufacturing side and the continued strength in the manufacturing PMI in the US is a little bit surprising, just in the face of some of the other economic indicators that we've discussed over the past number of weeks, and in particular the employment situation, where we did see a stalling out of the improvement in employment over the past number of months. So we'll get a read on the unemployment situation at the end of this week with the payrolls numbers, so we'll be able to maybe try and tie some of those things together once we see that data point. I think the other key point to discuss today is what's been happening in the Senate runoff in Georgia. So we started to get some and discuss the indications that it was becoming much of a closer contest, and the potential for the Democratic Party to take both Senate seats. What we now know at this point in time is that one of those seats has been declared for the Democratic Party, although it hasn't been fully verified as yet, and the other is exceptionally close in terms of the votes separating the two candidates, somewhat less than 1,000 votes. So no doubt there will be some recounts required around this, and it will take time to get a finalised result. But that win for one and the very close runoff for the other has seen bond yields, sovereign bond yields in the US Treasury market move out, and we've seen the US 10-year move to 0.95% in US trading hours yesterday, but continuing to trade through Asia overnight. And as these results have come out, we've seen the US 10-year move back above 1%, and indeed it looks as if it's about 1.02% at this point in time. And that's an expectation that what we will see potentially is the Democrats winning both seats. That will allow them to move forward with a more fiscal expansionary policy, but also with the other aspects of their agenda and the reform agenda infrastructure spending, etc., which would be supportive to economic recovery, hence why we see bonds moving the way they are. Just turning to Asia overnight, we've had the Caixin Services PMI in China, which remained in expansionary territory, albeit it did decline modestly from where we have been in previous months, but nothing of material to note. Just looking at the subcomponents there as well, there was a little bit of an increase in input costs, similar to what we discussed in the manufacturing PMI for the US. And again, worth noting in future months whether that is feeding through into any sign of inflationary trends. Just finally, can't get away from President Trump, even in the last days of his presidency, signs another executive order last night limiting and sort of ramping up the pressure a little bit more on Chinese companies, limiting the role that some of their transactions, the software apps for financial transactions and how they can interact with US consumers and US businesses. But with all things, that will then fall to President-elect Biden to see if he's actually going to enforce it, and that only time will tell on that one. So that's it for today. Please join us again tomorrow. Many thanks.
Subscribing to True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.